It's June, and we have another Austin real estate market update for you. I'm David Shapiro, my colleague Lee Abraham. We're local real estate agents here in Austin, and if you have any interest in chatting with us, you're thinking about selling or buying, we'd be happy to chat with you and tell you a little bit more about how we work and hear about your goals. So what we do here on the channel is we update you on what's going on in the market, and we're ready to do that right now. So start pulling up the stats. Remember, you can always find us back here at realestatevideohub.com, brings you back to our YouTube channel. And we have another video coming out shortly about a couple lists that we landed on. So go ahead and subscribe to the channel so you're notified when these videos come out. But Central Texas landing on some lists of hotspots. So these are two different articles that come out here shortly. Well, the articles are out, but you're going to hear our video on it when you subscribe. And as we start getting into the stats here, saw something with the average price that we haven't seen before. So we'll be getting to that. We also have some charts showing what it looks like over the last 10 years. I think that's really a lot easier for you to see graphically what's been happening. So we'll be sharing those as well. All right, well, starting off as we do with the number of active listings. And you can see that as we anticipated, seasonality, the number of listings is increasing. And if we look here, so we're in June, 3,200 listings. Lee, you want to talk to us about the monthly housing inventory?
Yeah, so the monthly housing inventory is basically the interaction between supply and demand. So on the supply side, we started the month with 3,220 active listings. If we look at how many pending sales there have been over the past 30 days, it's over 1,000, which is good news, 1,048. So if you're selling 1,048 listings a month and you have 3,200 listings, you've got about a 3.4 month supply. That is generally considered to be a seller's market, kind of a shortage. 6-month housing inventory, 6.5 month, typically defined as a balanced market. So as we look at this, two takeaways, even though it doesn't feel like it to a lot of sellers, technically it's a seller's market. The other is that if we look at the 12-month average, only 728 houses a month, we can see velocity picking up in each of the stats as the data becomes more and more current. 728 over the past 12 months, 857 the past 3 months, 917 closed sales in the past 30 days, David. So this is telling me that we have a market that's accelerating its pace, and we'll break it down a little bit in the subsequent slides.
Thinking more about your comment there, it doesn't feel like a seller's market to sellers. I mean, in my mind, it really comes down to the psychology of if you go back to 2020, 2021, people were getting prices beyond what they thought their home was worth. So they're just like, sure, yeah, they're happy to sell it. Now they're getting prices below what they thought it was worth in 2022. And so it's a lot harder for them to let go of that. It's really just the psychology of being in a market that was moving up versus a market that has moved down. And, we're stable, but it's really an interesting dynamic, because if somebody were to have just been asleep and woke, they bought their house in 2011, they woke up and we said, yeah, it's probably worth around $1 million, even though maybe it was worth 1.1 at the peak. And we say, yeah, it's probably worth around $1 million. I think we should list it at right at $1 million. And they sell it over the weekend versus being like, well, we got to list it at 1.1 and just see how much we can get out of it. So I think it's a really interesting lesson in psychology. We get to see it every day as we're working with clients.
Right.
All right, so then what we're going to do is chart this over time, and you can see that it's moving up slightly to 3.4 months. The peak, it's been every winter around 5 months, and let's see, where are we here? So we're in June. So if we go here, June, actually last June, it was at like 5 months. So well below that. 2 Junes ago, it was around 3, moving up to 4. So we'd anticipate that this is going to move up here. That's nothing out of the ordinary.
Right. And mostly on the supply side. So this is the interaction between how many listings and how quick are they selling. And so as that housing inventory goes up, it's usually a combination of inventory and then demand. And we'll be tracking it. So we look at what's going on here from a couple angles. Basically, we're in seasonality. And that's good news. So this number of sales per month is up year over year and month over month. However, this is where the 10-year view is very interesting. If you go to the next slide, you can see where we're at. And so, that kind of tells the story. And since we're promoting other videos that we've done, the video that you did, David, on the trends don't lie. So I was going to make a joke that we've asked Shakira to modify her Hips Don't Lie song so that we can have a theme for that, but we're still waiting. And so, yeah, we're still waiting for that.
So clear, you can see where the bottom was every year, generally in the winter, the number of transactions, and we're below that. And the peak is also below the peak of where it was. So 2021 being the outlier with the number of transactions. What's interesting is the number of transactions didn't get crazy out of line because there just weren't enough properties. That's why we had 10 offers on most listings. And so it's interesting that even though we didn't go spike up too crazy high above, we have dropped significantly below with these higher interest rates.
Right.
So here it is, the average sales price for the first time, it did not move year over year. So up month over month. And, most months, here you can see most years, it would move up. So, I guess it did move. What am I looking at here? So year over year, it's the same. It did move up from April to May though, right? And that's the same for every other previous year. And if we look back to May of 2022, which was the peak, we're down about 7% on an average sales price. So
right.
Should we jump?
So the Rip Van Winkle slide. The Rip Van Winkle slide is next for the person who fell asleep. Let's see when the best time was to take a nap here and wake up. Okay, we're doing it this way. The 10-year view comes after the median, so I jumped ahead a little bit.
Okay, so median down a little bit year over year, up month to month. And so May was the peak. So if we look back, 730,000 was the highest. Let's look on the average. Yeah, so also in May, the average price peaked at 914, median peaked at 730. And so we're down about 14%, 100 grand even down from the median. Maybe that's one reason people like medians, Lee, is you just get these nice round numbers with zeros on the end versus average. Look at these average numbers, just not as clean. So,
well, it's a sad reflection of society's reduced attention span, in my opinion.
So about 14%. So interesting dynamic that the median is down much more from the all-time high than the average. Probably points, which we've mentioned on previous videos, to that the luxury segment is doing well and pulling that average up. Anything you want to mention on either of these?
No, and you alluded to my bias against the median statistic. I've always looked down on it for a variety of reasons, but I'm willing to admit that when taken in context of the average and used kind of as a benchmark, it does lead to some accurate conclusions in terms of market segment contribution to the total. So I'm warming up, David. I feel warm and fuzzy towards the median, whereas I've always been militantly against using it.
Yeah, I like that you're open-minded. So one thing that we'll just remind people is we're looking, as it says down here below, single family homes in the city of Austin. So this is not, you'll see this stat quoted multiple ways, depending on where you're looking. Oftentimes it's the whole metro. Sometimes it includes condos. So we just like to keep it really simple. And city of Austin, single family homes. All right, here it is over 10 years, the average sales price and then the median sales price. So the charts look pretty similar. Obviously you have a peak in 2022 and it's come down, but not anywhere close to where we were prior, right? So if you bought your home here in this nice, steady appreciation market, you still have equity, right? It's really only the people that bought right here, maybe right here, which is like probably summer 2021 and then early 2022. But prices have been relatively stable. Doesn't feel like that to some people. Let's go back to average so people can see. The average actually, it looks like it's even been a little bit, well, the lows did not get as low as it did in 2024 or 2023. Any thoughts on what we're seeing here?
No, and I think that the general takeaway here is that, the median and the average typically move in the same direction and basically describe the same sort of phenomenon, and this is just verifying that. So, no, we can talk more about median, average, and all that kind of thing, but the basic takeaway here is, are we in an appreciating market, a depreciating market? How does that work? What are you comparing things to? I think this is very helpful to visualize the data in this graph. So, no, I'm on board.
it shows again what we've been saying for a couple of years now is stability. That's what the market is. I think this shows it really well. Price stability. There's still the same seasonality. You can look back to 2017, and the market always has had seasonality within the year, but pretty stable. And if people are waiting for the other shoe to drop, oh no, the bottom's going to fall out. What you have to keep in mind with the residential real estate market is most people got 30-year fixed rate loans. So their payments aren't changing. Doesn't matter what's going on with the interest rates in the market. And they have jobs, so they can afford to pay for it. The unemployment rate is very low right now. That's what's different. If you go back to the 2008 financial crisis, lots of people lost their jobs and lots of people had done adjustable rate mortgages, including me. I had an adjustable rate mortgage I got in 2006. So that's the big difference and why we're seeing such stability. So it's really hard to see that this is going to change all of a sudden and we're going to see much lower prices in Austin. Sellers, they don't want to sell at lower prices. They have, going back to the psychology thing, is they're anchored and they want to hold on and wait for prices to go back up. So I think we're going to be in this stability. At some point, we'll start to see, like that trend lines don't lie video shows, we'll start to see this go back along the trend line that we had here from 2016 to 2020. Nice, steady appreciation, which is good for everybody. All right, moving on. Days to sell. So that is up a little bit year over year, down month to month, trending in the right direction. Here it is over 10 years. Lee, any comments on this one?
Go back to the previous slide real quick. I think that we were up one day. What was it? Got to expand my view.
From 2025 to 2026, yeah.
From 42 to 43. So, the days on market last year were kind of fluctuating and then trending up in the, August, September timeframe, which is pretty typical seasonality. I'm interested to see the June number dropping a bit, David. That would be a real interesting indicator. If it bumps up a little bit like it did last year, going from 42 to 47, that would kind of dampen my forecast of the velocity that the market's going to have. If that 43 from May drops below 40 into the 30s for June, I think that's going to really be an indicator that we may be in for a stronger than anticipated second half of the year. So I'm really looking for days to sell, days on market for next month. What's the direction? And I think that's going to be a big indicator.
Okay. Subscribe to the channel so you get updated so you can hear what happens in June.
Right.
And so here it is over 10 years. I think this is a good ad, Lee, adding these charts. I think this is a really good way for people to see what has changed over time. So going back to normal times, although who knows what's normal now, but normal times, as we can call them, days to sell dropped so low. You know what that was like if you were in Austin or one of these other markets that was super hot during the pandemic. And then now it's corrected in the opposite direction. So hoping that this comes back down to something like we saw here. It'll be really interesting to see the 20-year of this when we go back out and see if we end up getting back to this.
Yeah, it definitely is interesting. And so new listings, David, down year over year, down month to month. Again, this is one of the reasons why the monthly housing inventory has been where it's at. We've talked about the discretionary seller that doesn't have to sell. They can lease the house in a lot of cases because they've got the low interest rates. This has really been the story of the price stability across the broad market indicators. And to see it kind of dip the way it did for the month to month, the 12%, kind of fuels that fire again. So if that days on market dips under 40, this dips again in terms of the number of new listings. It's adding fuel to the fire of a second half, strong market. We'll see what happens.
Do we have any anecdotes that might be applicable here? We have a lot of clients right now. Some are buying, some are selling, some are trying to do both. So
the one area that jumps out at me that we've been working in recently, both from the listing and buyer side, is the Mueller area. And I know that there's a correct pronunciation of Miller, but everybody calls it Mueller. And so that's what we're going to do. It seems like there's a very interesting microdynamic going on there, particularly for the premium homes over 1.23 million in Mueller, with a demographic of basically you're demographic, the young, successful 40-somethings, 30-somethings, career-driven, starting families and so forth, that value walkability and that social interaction vibe that may come with the East Austin market or downtown, but is a little more safe and secure, family friendly. An appraiser would call it homogeneous in terms of the quality and design and age of the buildings, whether they be commercial or residential. And we're working on the upper end, both again on the listing and buyer side. I was shocked to see when we searched active listings in Mueller over 2,500 square feet, there weren't any. There were no active listings in that larger segment. And so the phenomenon there is a lot of stuff selling off market because the demand is so close to the way it was in the peak of the crazy market when there was a lot of off market activity. So what am I saying? I'm really big on the Mueller community right now, particularly at the upper end. I think that that's going to be a very strong market going forward, and more of that master planned community taking effect as some of the outlying areas, even in Austin, continue to develop, David.
Yeah, I want to touch on, if you haven't lived in Austin yet, you're thinking about it, it is really important to fit in here is that you pronounce things incorrectly. So there's a lot of examples of that. It's not Guadalupe, it's Guadalupe. So make sure, those of you that are Austinites, comment below your favorite mispronunciation of something. So yeah, I think that that's a good example of this, and also points to the idea that this is a seller's market, because there are a lot of people feeling like it isn't, but then there are these pockets where it clearly is a seller's market still. And it comes back to what we've talked about in the past: school districts, family oriented. Those are the people that are still willing to move and pay because people will do anything for their kids. So those areas are still really strong.
Right. And just to, go one little layer deeper, I alluded to it, is that walkability is a big deal for folks. Coffee shops, walkability and all that. So schools, yes, all those other things. But that's one variable that the Mueller area has, is that walkability. And
yeah,
I think
we've talked about this. This is probably going back to 2021 or something, where people were like, oh, autonomous vehicles, they're going to just change the dynamic. Now you can live anywhere and the car is just going to take you into the office every day. And I said, no, people want walkability. They don't want to have to get in an autonomous vehicle to then go to the neighborhood that they want to walk around with their kids. Like, if you have kids, you know how much effort it is to just get in the car with them and go somewhere. So to be able to put them in the stroller, walk out the door, go to a coffee shop, go to a restaurant, that is not changing because of autonomous vehicles. I said, until they invent teleportation and you can just roll your stroller through your teleportation portal and you end up where you want to be. Once we get there, then, so Elon, I'm sure, will launch a company to do that here in the coming years. And then we'll have to start worrying about that. But for now, it's not on the radar. Well, this is an interesting chart because it's hard to, unlike the other ones, which are so clear, it's hard to decipher any change from the normal times to the early 2010s. So what do you take from this chart?
It's a very interesting view, and it is more nuanced to interpret. I think that the number of new listings in this view has to be taken in context to the monthly housing inventory and its impact, because at various points when this is remaining what appears to be relatively constant, the number of sales has been going up and down, impacting the monthly housing inventory, the actual number of listings. So to me, I give this a little bit less weight in context of really interpreting it, because I think there's more to it than just how many new listings. Overall, it may be an indicator of some stability, but I would think, David, stepping back, it should be going up as the market continues to grow and evolve. In a normal market, I would typically want to see the new listings going up. And the fact that this is relatively stable, I think, is probably the story. So while it looks like it's stability from this view, the fact that it's not going up kind of shows the seller side stronger market than you would think. So yeah, this indication of stability is actually an indication of a supply not necessarily keeping up with demand based on the monthly housing inventory.
Okay. Sales price, list price ratio. I think it's really interesting to look at it on this chart.
Yeah.
2021, what a difference. And even 2022. So,
but look at the relative timeframes from 2016 to, call it, 2021. and just that average in there. Okay, not the median, but the average between 90 and 100, right? So now go to 23 and just average those and look where that line is, And so that's really the market sentiment of it not being a seller's market. That's what it feels like to folks a lot of times. So, but yeah, the one thing that's really crazy is if you were to track this back 50 years, this is a 10-year view, you're not going to see another spike like that,
Yeah, once in a lifetime.
Kind of, at least in mine. Yeah.
All right, our inventory barometer. And let's just jump right here to what expireds, withdrawns added in here. So what are we seeing, Lee?
Well, basically, you're not seeing a net retraction, and you're also seeing that the number of expired and withdrawns is relatively modest. So we're also looking at the barometer ratio numbers kind of ranging between the low 160s and the low 120s. This again is, it ties into the monthly housing inventory. Like to see this go up, really. I'd like to see this, as I said, closer to 200%, where you've got a good supply of listings that aren't being absorbed right away to kind of give buyers some more choices, bring more people into the market. So yeah, it's basically telling me that the second half might be pretty busy.
And here it is. This is the one we've been tracking probably most closely because, no pun intended, because these lines are tracking closely. And you can see that's been the trend here. And we kind of predicted that, this would happen. Although this drop off here, that's really interesting in the number of new listings, right?
Right.
So we'll see what happens. I'll be curious to see, could these lines cross that this early in the season? That feels like definitely a change in what you've been alluding to as a different second half of the year than we've been seeing the last couple of years.
Correct.
Okay, here we go. We got the mortgage rates with the chart. And so we were at 5.98 February 26th. So what is that? 3 months ago, we were trending down, felt like things were getting hot. And then Iran happened and this spiked. And now we're kind of hovering back in the 6.5. If you were to zoom out, and let's go back 5 years, actually still lower than what we were seeing back in 2023. And so it's not horrible, but not trending in the direction that we had been, which was looking good.
Right. Well, for this point in time, just looking at the chart above, down a little bit week over week, down year over year. And so, we've always, at least for the past many months, have talked about 6%, sub 6 being really the key to getting people back into the market on the buy side. And so we'll see what happens, but moving in the right direction if you're rooting for the Austin real estate market.
And it feels surprisingly strong considering this. So it'll be really interesting to see what happens when the rates do come down. All right, well, if you got a lot out of this video, go ahead and share it with a friend, give it a like, and don't hesitate to reach out to us. Our info is below if you want to chat about real estate in Austin. Remember, it's hyper-local. So, this is talking about the city of Austin. We talk about how Mueller's hot, other neighborhoods are hot, some are slower. So if you want us to look at your property, we've been doing that for plenty of people over the last couple months here, taking a look, giving you a hyper-local kind of analysis of what's going on with your property. We'd be happy to do that. And go check out our website. We got listings live now. We've got, I don't know how many listings, 8 listings right now. So if you're thinking about buying something, you want to take a look at one of our listings, we'd be happy to show them to you. We've got some cool ones and some more coming soon. So thanks for joining us, and we look forward to talking to you next month.
Thanks, everybody.